but you have to ride out an investment wave too. And I think that, to be very fair, I mean, the question I always ask people is that, if you go back to the 80s or the 90s when interest rates were like absolutely insane and the markets were crashing and things like that, find me one person who bought a house in that time period that owns it or owned it for 20 years and lost money. Yeah. Find me one person that said holding on to that property or whatever, that was a terrible mistake.
I agree. All right, Mary-Anne, so we're back, and I think where we last left off, we were talking about data, and just so that real estate agents understand the market and not to overlook that, the importance of it. When they're talking to the buyers, they're talking to the sellers to understand what's happening. So touch on that.
The consumer right now, you have very, very, very different sellers versus buyers. So sellers in today's market are very emotional. Yep. Okay, their belief system is based on emotional, like my neighbor sold for this, or it used to be valued at that. So they're emotionally driven belief system. And the buyers today are very data driven. So they're like, hey, if this house isn't worth it. So you've got, two parallel universes operating right now, which is actually why, interesting statistic, over 70% of the offers currently that are running in the market don't come together. So very high number are not coming together because we don't have enough data with the agents to come to your clients and say, I'm going to show you all the data in a calm, very unemotional way, saying this is what the market data shows. It's very surface level data. And you're going to start to see that the consumer needs predictive data. So they need to know where the path is going. So I would say even things like having the Canadian Real Estate Association, CREA's reports, they do the quarterly forecast. Those are really great nuggets of information, and that is very great data. I value it tremendously. Treb puts out some incredible data as well. There's data everywhere that we can pull from, economic reports from BMO and other, areas. You have to have enough data to show what the predictive future looks like for the consumer. They're craving that from today's realtor. So investing, and you asked a question in the last episode about, what team leaders should be doing. You need to educate. Brokerages need to educate. There needs to be a lot more conversation about looking at charts and data and graphs and looking at, month over month. So month over month data is critical right now. If you're looking at, there's over 10,000 pieces of negative real estate data hitting the market daily. So you have to everybody's looking for the negative news. Start looking at your area and start month over month, January to February, February to March, and start looking at data like days on market, how many active listings, what was the list price to sales ratio, what was the average sale price. Every single month, look at your area and study the data, and you are going to see there is some remarkable movement happening in the market. It's very positive as opposed to what you're seeing out there, and the consumer needs to see that.
Yeah, we sat down with a client recently, and listen, I understand that when they see a certain price and where it used to be back in 2022, 2021, but you've got to educate them because it's all in the data. And so we sat down, we went through the data with them, we showed them the stats, we showed them what has recently sold in a month.
Correct.
And then what new listings have come on. And so you can see that, well, we're moving in this, because when homes go up, they go up like an elevator. When they come down like stairs.
Yes.
And so we're in this market where they're coming down like stairs, but they got to be educated.
Yeah.
If you just come and say, well, the market's down, and I'm like, okay, well, how do you know that it's going down? And how do you know that it's not coming back up? But if you show them the data and educate them, then it's easy to then say, this is why we need to lower the price, or this is why you're not getting the activity that you're anticipating. And maybe we need to get back together once we lower the price in a couple of weeks to see where things are. And I'll give you more data. I'll get you more information. I'll show you the new listings that are coming on, your competition, what's recently sold. Yes. But you have to educate them. I agree with that 100%. And
I think our markets are, I really do believe that our markets are fantastic. And, I think if everybody starts to see that real estate is not a in the moment thing. You can't do that. And I think, we can get caught, the consumers can get caught looking at just today.
Yep.
And then they get really obsessed with it. And they, especially in Canada, because in Ontario, which is the biggest driving market for real estate stats right now, is a lot of consumers look at what they had in 2020, 2021, and then they feel like they've lost money. Like they feel like it was tangible.
Right.
And it's like, and they're missing how well their performance or their house is actually done. And you're looking at that, you're going, wait a second. So we created this great model now where we show the consumer, the internal rate of return of their house since they actually purchased it. And we're like, sure, at one point you did have an extra 6 figures. However, look at the overall performance. Don't just look at today. The overall performance is beautiful in many cases.
Such a great point. I sat down and I shared that data with my client as well too, where I'm saying, okay, well, look, you bought this home in 2010. Okay, we are now in 2025.
Right.
What do you think is a normal average appreciation annually?
Exactly.
And they say, I don't know, maybe about 4%, 5%. Hey, let's use 5%. Let's use your higher number. And then we do 5% for the 15 years. And we're like, your home, this is where you should be in a normal market. And so anything above that is gravy. And then once you educate them, it makes such a huge difference. It really does.
It's a win. It's taking, the positive, and we've been beaten up in our industry, and the poor consumers too. Yeah. All they see on a regular basis for 5 years is negative imprints about the market. Negative. Yeah. Like, and everybody is feeding into that. Like you look at, the defaults of mortgages or what's happening, and we're still historically at an all-time low. Yeah. But yet the media is programming the public to think that it's terrible. And you really have to look, there are definitely people who overextended themselves. However, most of it is personal expenditure as well that's put them in these situations. So you have to really look and take things with a grain of salt. But then you have to, again, the internal rate of return, as you said, what you bought it for and what it's performed now, the Canadian average is 4% a year. So anything above that, you've outperformed. Yeah. And if you look at it, I don't think in Canadian history, there has not been one period of time that you can look at a 10-year cycle of owning a property and somebody has lost money. It's not possible. Not the market, that's for sure. And so I think it's a lot to, agents really need to learn how to look at that data and show the consumer that you're still winning. Because a lot of Canadians use their profit for retirement, and that's, it feels like such a loss to them. Yeah. But it's not. I mean, their houses perform great. And in this market, you want to continue that performance. You want to go and buy something else and, reinvest. And I think it's,
and especially if you're moving up. What a great time to be moving up, because the percentage of a larger home is a larger drop than, say, if you're in a starter home.
Right.
And so what a fantastic time. And so I've got a couple clients now. I'm like, this is a great time. Amazing. Let's go, because and then you got to look at that delta. What's the difference between, like that home that has come down compared to what your home has come down? And I'm telling you, they're winning. You're winning if they're moving up.
Totally winning. And you're going to see, like, next year, there's a statistic that was just produced, I think it was about 2.5-3 weeks ago. Yep. And it said that in Canada, especially Ontario, the number one, it's going to be between 44 and 46%, apparently. 44 to 46% of all home sales next year will be baby boomers selling. So that 61 to 72-year-olds are finally going to say, you know what, we're happy with everything now. We're used to this. We get it. They're going to sell. Most of them are mortgage free, and they're going to do a major generational wealth transfer. So that's going to be huge next year. So that point about getting into the market, I think you're going to start to see that. It's going to drive to eat the inventory. And I think those baby boomers are really comfortable now going, okay, we're good with where we're at. Rent's gone down if they want to go into rentals and all sorts of stuff, their freedom, their lifestyle. Yep. It's going to probably be, I think, in 2026, one of the most exciting years for that. So I think, we've struggled now with the mental game. And I think it's the hallelujah moment in 2026 where all parties are going to see the opportunities that exist for them and say, okay, it's time to do something.
Yeah, and there's 2 points there that you touched on. So one is regards to how many people are mortgage free. What do you know what that number is? Huge. I heard it's a high number.
Huge.
Is it over 50%?
It is over 50%.
Yeah, it is so over that's 50.
Huge.
And there was another point there that I was going to make, but I think people forget this. How fast time goes. We've been in this down market since 2022. Yeah. We're getting close to 4 years, because I would say around March 2022.
Yeah.
So people forget that. Now, Could it continue to go on for a little bit longer? Possibly, but you believe 2026 is when things are going to turn around.
I've predicted it accurately for 7 years.
Okay.
So 7 years, I stood in front of a stage in January, I believe, of this year. And I said, we were going to have in Canada, we were going to have only one positive quarter. I called it as a third quarter. I said it would be negative, positive, negative.
Okay.
I called the rate adjustments. I still think we're going to have a quarter point this year and another quarter point early next year. And then I think we're holding because everything comes unglued around 2%.
So we'll sit around 2%. I think anything below 2% is emergency, right?
It's not good. Yeah. And it'll hurt our market.
Yeah.
So I really believe, I personally believe 2026, my prediction for 2026, I'll call it first time early here. I'll say it very early. I believe that you're going to see an early spring. So I think we're going to see like early as in second week of January. I think it's going to be very early spring, very similar to 2023 first quarter. I think we're going to see a good 6 to 7.5% jump in sales. I think you're going to see an incredibly strong second quarter, like really ridiculous strong. I think you're going to see a double-digit sale increase in the second quarter. I think that's when you're going to start to see marginal price increases of about 2%.
Now, what about foreclosures? Because foreclosures are slowly going up. Do you see that getting worse? And I think I'll also add to that too. I mean, we're still incredibly low. I think we're still under 1%
very low
nationally.
Yes.
Yeah. But do you have any concerns? Do you see that to continue to go up, or do you think that because these rates have come down, that
I don't believe we're going to see it. I think that because you're going to see a little bit of an adjustment with pricing, what I'm hearing is that a lot of the major banks and even lenders in general are coming up with solutions. They don't want to see the foreclosures happen. So they're coming with solutions. They're looking at the mortgages that they loaned out. They're looking at their losses. So there's some creative financing that's happening with that I think is very interesting that we're starting to see come out of the pipeline with some of those. I don't believe it's going to be as impactful as people are making it sound. We're still incredibly low. And I think, is it out there? Yes. I just think we're a lot more aware of it. So I actually don't believe it's going to be a big issue.
Yeah. Okay. While we're on real estate, while we're into data, while we're into all of this stuff, let's touch on a little bit of real estate investing. I want to spend some time on this because, in 2020, all of a sudden there was this big boom, this big excitement of people really wanted to get into real estate investing. Everybody's sitting at home, they're sitting at their computers, and all of a sudden there's gurus popping out of the woodworks that have been investing for 3 months and now they're selling coaching programs. All right.
Oh no, you're not going there.
Yeah.
Oh no.
So let's talk about what were some of the big mistakes that happened during those about 2 years. 2 years plus. I
think you nailed it right there. I think the credibility of who you listen to and who you believe in, like I think that was the most dangerous thing I've ever seen. People who were talking real estate investment, and they were just on, like, if you go back now, not everybody scrubbed their stuff. I would almost tend to, like, when we really want to see something, we go back to 2020 and 2021 and we try to pull old videos of all these people who are sitting there on the market going, buy now. You're crazy if you don't buy. Yeah. You got to get in now. The market's going everywhere, but down. It's up. And where did they all go? What happened there, right? There needs to be stronger regulations. 110%. There needs to be liability with the advice that people were giving. I'm so disappointed with some of the stuff that happened there. But the consumer trusts us, right? The consumer didn't know any better. And, in an economy where everybody does want to secure a better future, innocent people were just going in buying condos. As an investor myself, I wouldn't have done that.
I know. And they were buying 2, 3, 4, 5 condos at a time.
Yeah, they weren't
because
looking.
Uncle Bob did really good in 2016, 2018, 2019. So Uncle Bob's never wrong.
Uncle Bob wasn't wrong. And then everybody was like, pre-con. And, I think the education just wasn't there. And it's fear of missing out. Fear of missing out is a mental game. I mean, it is. And it got so, you have to remember, human programming of the brain is look at COVID.
Yeah.
Look at all the things that got shaken up in COVID with, low rates and buy this and money's free.
Yeah.
And the amount of borrowing that happened was ridiculous. So I think personally speaking, that was a really, from an investment standpoint, I stood back and I did the right thing. I advised my clients. I said, you can buy, but you need to be able to hold something for 10 years.
Yep.
Because if you study things, tariff wars, pandemics, anything in real estate, there's always it's boom bust echo.
Yep.
So you know it's going to bust.
Yeah.
You know it's going to bust.
And you just don't know when. And
Correct.
Fortunate for me, when I got into real estate investing in 2008, I was educated by people who were in the market or seen the market damage their family or their father in that late 80s, early 90s. And so when I went to these events with these coaches and mentors, they warned us. They warned me of, be careful.
Yes.
Cash flow is king. Cash flow is king. Cash flow is king. And that's all they ever said. And it was so much. I'm like, it's too much. Cash flow is king. But the importance was to move to markets if you have to find that cash flow, something that can sustain itself, and then also get your hand ready for that hit that fix button. Get ready, because you don't know when those interest rates could take off. And so because of that,
nailed it.
I stayed very close to those people. And number two, when I was educating my investors, I'm like, nope, that market doesn't make any sense. Numbers don't jive. Let's go further east. And we went into Peterborough in 2017. And so we always paid very close attention to the numbers.
Yes.
And I'm so fortunate and happy that most of our investors have done incredibly well. And I did not move anybody into condos. I just said, it's too risky. If you're going to do it, got to go to somebody else, because I don't understand the condo market, and I don't like speculation. I want to know the numbers today and what I can do with this product. And then number two, I don't want a box, because I can't do anything with that box. I want land. I want to be able to maybe put a garden suite in the backyard or whatever it may be. So,
and who's managing your money in a condo?
Yeah.
Like, what are the regulations of a condo corporation managing your money?
Yeah.
Like, you have somebody else, and you have a group of individuals who are going to oversee your corporation, your condo fees, and you don't know them. I mean, it's a job. Have you interviewed them? Do you know them? I mean, I've always been cash flow, and, it protected me. That mentality protected me. But I think, I don't blame people for falling into something, but I think also you have to interview whoever you choose to take investment advice from. You need to, in any coaching advice period. I mean, whether it's investment or whether it's, other coaching, would you, if your personal trainer, was a smoker and was trying to teach you how to live a healthier lifestyle, like, something doesn't match there. So I don't think it's offensive to dig a little deeper into the credibility of an individual and say, well, what do you invest in? Can I see your portfolio? Would you be able to share that with me? I don't think that's an illogical question. I think that's smart.
It's such an important question. Are you where I want to be? And number two, how long have you been doing it?
Yeah. How long? What do you own?
Right.
I mean, some of these people who are giving the advice lived in their parents' house. And I'm like, wait a second. So you live with your mother and father, and you're telling everybody to go out and buy investment properties. I'm a little confused about that one.
Right.
It's a little scary. Yeah. But they're also like, how long have you had your real estate license for? How, what's your portfolio look like? And nowadays, I think the cool thing is you can go on to ChatGPT and you can say, okay, I'm about to invest in this. What questions do I ask? What questions do I ask this individual that I'm getting coaching advice from to make sure that this is the right person that is not going to steer me down that path? And I think that's the one advantage of AI that I'm seeing in the investment world, where I'm like, perfect. And I think it's very dangerous. I'm afraid we're going to go back to that in another year or two. I'm very concerned we're going to go back to the investment coaching world, where there's going to be a lot of investment coaches out there.
Yeah, you think that's coming back? Yeah,
I really feel it's coming back. I feel it's very much coming back. I feel like, there's going to be a lot of coaches saying, go to the United States and invest. There's a lot of people who are just throwing in, wild speculations, and I always say to people, if somebody is really great at what they do, then they have raving fans that they can put on social media that will honestly show the credibility.
And you're right. There's a lot of people now moving into the U.S. There's a lot of coaching that's going into the U.S. And I still think there's lots of great opportunity right here. Yes. Toronto's a world-class city.
Absolutely.
And if you invest on the outskirts of that city and where the numbers make sense, there's still lots of gold to be here. And they're like, the tenant, the RTA, it's against it. Listen, man, it's been like that for a very long time.
It really has.
Fine, okay. They've made a few things that's made it a little more difficult, but at the end of the day, here are the numbers that I always share with investors. I sat down, I went to a friend's house, and there was a group of about 10 investors, and they're like, ask me any question, because I've made lots of mistakes along the way, but I'm here to help you. Is that 80% of tenants are good, 10% of tenants are great, meaning they'll leave your home better than they left it, and 10% are the professional bad tenants. Yes. Those 10% are really good at hiding in the 90.
Absolutely.
And so then your job then is to be able to properly screen or find a good company that can screen for you. And if you do that, you can have a great success. It's like 90% success.
I think investing in Canada and Ontario, I think it's awesome.
I think so too.
I think it's awesome. There's so many great pockets and there's so many great places. And I think it's comforting too, to be within a perimeter that if anything happens, you can go there. So yeah, I really do believe in investing in Canada.
Yeah. So you believe that 2026 is going to be better. And if a real estate investor is looking to get into the game now, do you think now is a good time? Because people are still trying to time the market. What are your thoughts on timing the market?
I think you have 3 months to go.
Yeah.
You better, like, I'm losing sleep right now because I'm like so busy with coaching and work and building everything that I'm like, oh my gosh, like I literally am like losing sleep because I want to secure a few more before the end of the year. And I think the opportunities, like, even like duplexes, there's so many deals out there right now.
Yeah.
There's great deals. There's amazing units, and there's so much transferring that's happening, and there's so many great opportunities out there. Yes, absolutely. You have to ask yourself one question. Do we still have a housing crisis in Ontario? And you have to look at, the best thing I would do is I would start to say, where are every area, every city in Ontario, for example, has a housing grade. Right. So if you go to Guelph, but you got an F. Okay. So for the housing starts. And if you look at, they're at an F. I think they 78% behind their housing start requirement. Yeah. You go to Ottawa or Barrie, Ontario, they're at, they've exceeded their housing starts. So that, what are housing prices going to do in those areas? Probably not much. Because they're already ahead of what they need to be building to have a supply and demand. So you're not going to experience that. So start looking in all the pockets in Ontario that are getting really low grades in housing starts, because that means the demand is going to be quite high there. So if you can look at where those pockets exist and then start talking to an investment specialist and say, okay, you know what? Is this a great place? What kind of jobs are coming there? What kind of companies are being built there? Take the time and look, and you can foreshadow it. And, I like to go around in my city and I look at huge parcels of land, and go and dig who owns them. Right. So I just found out Loblaws bought this massive parcel of land. And then I found there's all these other corporations that bought that land too. So I'm like, so I do the research and I'm like, perfect. And I found a great investment property right across the street that, is incredible. It's a beautiful corner lot that I can actually do 2 entrances to. Right. It's incredible. It has a squatter on it, so I have to go through some issues. But I'm like, this is the kind of stuff that's out there that is brilliant right now that you can invest in.
Right.
And the future is just, we have a housing crisis still, and we're doing nothing about it.
I think people get caught up in, but where is the market going to be next year, 2027, as opposed to where's the market going to be in 2037?
Exactly.
People get so caught up in the short-term game that they're missing the long-term game. And real estate is not an in and out game. That's not where you make your money. You make your money in it long-term.
Exactly.
Because you never know when that hockey stick curve is going to take off.
Right.
Because it just goes slow, slow, slow. And that's how it should be. I want boring real estate, and I'll take the appreciation when I get it. But I don't know when it's going to come. So I just want to get into the game and run my numbers, understand the data, look at the stats, talk to the city planners. Are they making changes to the bylaw? Because if they make a change to the bylaw and they upzone my property, well, that's just free money. Because now I can convert it to a 2-unit or a 3-unit or a 4-unit or whatever it may be.
100%.
Right.
And it's like you said earlier, cash flow. Like, if you're getting something and you're cash flowing, then what do you care? Wait 10 years.
Yeah.
Like, to me, I've never felt bad about anything I've invested in except for a condo. And that was, a bad investment many, many, many years ago. And I learned my lesson, dealt with it, moved on from it. And then everything else has just been, ride it out. And I've been very happy with it. I was even stuck on variable all these years, and I still was cash flowing. Right. So I feel very good about, about, everything that I've done. And I literally think like, yes, I can see where the market's going. We're absolutely bananas because we have a housing crisis. And as long as you have a country or even a province that has a major housing crisis, there's nowhere to go but up. There's nowhere to go. You're buying something that they're blatantly telling you that they need more of. Well, how is that bad?
Yeah. I agree.
It's not.
Yeah, that housing crisis is going to be definitely, like, you don't see it right now, but it's going to 100% happen because the starts are not there. There's more of an affordability issue right now, but those prices are coming down, and I think they're kind of getting close to maybe the bottom, and we're not bottom section of that bowl. I don't know where, but we're definitely in that bottom section of the bowl. But I think you're right. I think it's about understanding the data and spending time with people who have been in the game for a long time that can guide you properly.
Knowledge is power. So find the people who use it, find the people who can prove it. It's okay to interview, it's okay to ask the right questions. It's okay to get personal with somebody who's giving you that guidance. And like I always say to somebody, I'm like, references. I mean, like, why is it such a bad thing to say, hey, would you mind if you give me 2 or 3 references of people that you've successfully worked with? That would be important. Yeah. I've always felt that that's like a really, okay thing to ask. You do your due diligence. It's not going to protect you 100%, but you have to ride out an investment wave too. And I think that, to be very fair, I mean, the question I always ask people is that, if you go back to the 80s or the 90s when interest rates were like absolutely insane and the markets were crashing and things like that, find me one person who bought a house in that time period that owns it or owned it for 20 years and lost money. Yeah. Find me one person that said holding on to that property or whatever, that was a terrible mistake.
I agree. Listen, we are getting close to the end here. I love asking this one particular question. Sure. It's actually 2.
Okay.
What is the best day of your life and what is the worst day and how did you overcome it?
Oh boy. Okay. I will say that the worst day of my life is when I lost my mom. Yeah. So the worst day of my life was that day. I don't think there's ever a day that will ever be as bad as that because I woke up in the morning and she was there. And we were there. And then, in a period of hours, my entire life changed. And, it went into just, that led to being homeless. That led to so many things that were so terrible. So, you know what, for me, that was probably the worst day of my life. Yeah. And I think equally, this is going to surprise you. It was the best day of my life too. So when you have, it's the worst day, but it's also, I've learned to make it the best day. And the reason it's the best day of my life and the worst day of my life, and I did not prepare for this question at all. So I've never been asked this actually. So I would say it's the best day of my life in the sense of, I have never had anybody in my entire life because I was so young. I never had anybody in my life tell me I couldn't do something. Right. And so I have always just really, by not having her in my life telling me anything, there was nothing, I was able to create a version of what I knew of her and what I believed, that would just be like, I believe I can do anything because nobody has ever told me I can't. So if I don't have that influence, and I surrounded myself from that point on with books and mentors and people who I just wanted to tell me that, you know what, you can do it, girl, you got this. And I've created a mindset that I truly believe I've overcome every obstacle because I've never had anybody tell me I can't. So many people have people in their lives that, try to bring them down or tell them they can't do something and they hide behind it. And I think if she was still in my life, it's possible. She was an immigrant. She was a kindergarten teacher. She didn't believe in investing. She didn't believe in any of this stuff. So how do I know where I would have ended up? I probably would have not been the fearless badass that I am today. So is it the worst day? Yes. Worst day of my life. I lost the person I love the most in the world. However, it's the best day of my life too.
So powerful. I'll share something with you real quick and then we're going to wrap it up. But I lost my mother, lost my mother-in-law. And this is when both my wife and I were working a corporate job. But you're right. It's like it becomes your best day because you use that and realize that life is short.
Totally.
Make the best of it. It allowed us to create mini retirements. Now I'm not worried about when I retire, because I just love what I do. So I'll just keep doing what I do. So thank you so much for your time.
Thank you, Gary.
How can people learn more about you or get in touch with you?
I would say two things. You can we are always on Instagram. So Instagram is my only place, Mary-Anne, MaryAnne.Gillespie, Gillespie. We'll put it up there. Or you can go to our website at redapplecoaching.ca. And we are always it's me on Instagram, none of my other accounts I'm on, but that is me there. And then our website, we are always updating that with events and challenges and things that people can go and reach out to me if you need anything.
Awesome. Mary-Anne, thank you so much for your time.
Thank you
I appreciate
so much.
it.
I love it.
All right.
Thanks for having me.
Awesome. We'll do it again.
I love it.
All right. See you guys.
Bye.